Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose, and this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option.
Let me charge your battery, baby. Energize me. Use me. I'm your utility.
Good morning, everybody. Welcome to Sniper's Life Trading. Are you feeling the electricity? Gerardo, that was a perfect song for me this morning, man. I was feeling a little tired, a little worn out from the weekend, and that just jacked me right up. So welcome, everybody. Andrew, Jack, Jeff, my family here, Mike, Jasmine, Johnny, Leo, Ted, Daniel, Carla. Hey, Carla. Michael, Paul, Marcia, lots of people. It's good to have you all here. Let's get into the markets a bit and see what's up for the week. The first thing I want to point out to you is that on Halloween, maybe that's the good time for it. The Fed meets on Halloween, October 31st to November 1st. That's coming up in a couple of weeks. And maybe not a rate hike, probably a quarter basis point if they do on November the 1st at 2 p.m. So that's starting to raise its head. It's starting to gain more import as we approach the 31st of October. So just know that, be ready. We'll look at the reports here coming up here in a few minutes. I am now going to go through the futures markets, the S&P, all the four major market indices, oil, gold, silver, bonds, US dollar, and Bitcoin. Maybe not Bitcoin. We'll take a look at it though. So I put this up from time to time because Tom's Tools isn't open. It doesn't go live until 10 a.m. this morning Eastern time, and for that reason, because we're going to be finished at 10 o'clock, we got to use futures to get an idea of where the markets might be heading next. So news, we'll come back to that in a minute. News, Pfizer pre-market is down. Lululemon is up, going to the S&P 500. Manchester United, the British soccer team, a buyer has backed out. So there's three opportunities for us we're going to look at in a bit. Rite Aid is going out of business, bankruptcy, slowing sales, opioid litigation. It's at 50 cents. There's nothing we can really do there on that one. But there's a lot of stuff out there right now. I'm going to take a look at Pfizer, at Lululemon, and BioNTech as well. Those are good looking trades for us to place right at the market open. Bloomberg, really not much going on, with the Gaza the conflict in Israel is still going, of course, and intensifying. And then we'll take a look at what that's doing to oil. Not a whole lot more on the horizon. Reports for this week are this. We got retail sales tomorrow morning. Expect those to drop. That's what the Fed wants to see. Just taking out the big ones here. Fed Governor Michelle Bowman speaks on Tuesday as well. Housing starts 8:30 Wednesday. You got to be looking at housing starts, y'all. One of the most bearish sectors right now is real estate, for all the reasons I keep saying. Higher interest rates, consumers are running out of money. They're over $1 trillion of consumer debt. So housing market is under pressure. That could move the market sharply tomorrow morning at 8:30 Eastern time. More Fed governors speaking. Jobless claims come out on Thursday. Again, existing home sales. So it's a real estate week, y'all. Keep an eye on real estate. I'll talk about real estate in a minute and how you can track it. And then Andrew's favorite person, Fed Chair Jerome Powell, speaks noon on Thursday, as well as a few other Fed presidents and Fed people. So that could be a market moving event on Thursday and Friday. Not much happening. Another Fed president speaking. So the Fed people are speaking this way. Home sales, jobless claims are the big economic potential catalysts. I was going to say landmines, but they're catalysts. Yes, please let there be uh, fewer jobless claims instead of more. We want more jobless claims. If we get fewer, we might see the market collapse. And I like that. I want big movement in the markets. We can make a lot of money that way. So let's go to the markets. Let's take a look at the S&P 500, the /ES. So we're getting a little schizophrenic here. We had a big crash. We had a bounce. This bounce happened even with less than favorable economic reports that came out. And then we dropped hard this last Friday on jobs, a jobs number that was too hot. And today, pre-market, we're slightly above this neckline of this head and shoulders pattern on the S&P 500. All right, so it looks to me like we have some, we're starting to consolidate a bit. So you have this upper resistance line at the 50. We got the lower support line at the 200. This line here is the 30-day average, the purple line. The blue line is the 10-day. Everything's starting to compress. All right, so possible breakout. In which direction? I don't know. But if I was a betting man, given what we know about the markets, I would say down. I've got my eye on the 200, and you should too. We get a close below the 200 on some of these reports, or what the Fed says on November the 1st. We could see a really market move to the downside. Okay, so that's the S&P 500. Let's look at the Dow Jones Industrial Average /YM. And what I find interesting about this one is that the neckline of this head and shoulders pattern has it's sort of been breached, but not significantly. So today, the Dow is slightly above this neckline, also above the 200. I have a feeling though that this level at 44,000 or so will hold. Let me slide this up. Well, I don't know if I can do it. If you see the cursor there, right around 34,000, the futures have not closed above 44,000 during this period here. So I think that's probably going to hold, and we'll see further downside on the Dow Jones Industrial Average. NASDAQ's been strong though. NASDAQ's holding firm above its neckline. Shoulder, head, shoulder, bounce, 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 bounce. Coming down a little bit like the rest of the market did Thursday, Friday, back up. Now maybe above the 50-day average at the open. So this looks more sideways to down. Tech is still hot. Tech is holding the NASDAQ 100 up. I mean, this index is well above its 200-day average. So tech, if you had to go bullish in this market, tech or NASDAQ stocks would be a place to look. But I wouldn't do that. I would not go bullish in this market just yet. Russell 2000, the small caps, they have been coming down hard. Look at this trend. It's just beautiful, connecting the highs here. Same head and shoulders pattern. Small caps, institutions dump small caps if they intend to distribute their portfolios out of stock into safer assets like cash and gold and silver. And this downtrend is intact, as marked by this 30-day average here. That's generally the trend right here. We also had our but death cross 50 crossing below the 200-day average. That was on Friday or Thursday. Yes, Friday that happened. What can we do with this? What can we do with this? How about selling some call spreads above the 200-day average on the IWM? There's a trade. This neckline is super strong. I mean, look, you get your death cross. I hadn't seen this death cross until just now. And so then I'm going to go to the IWM. And then I start looking. We've done one of these before. We've done it. We sold a credit spread here and banked. So now the IWM will open at 171.75, which is not that high, much higher. But I'm looking at this going, man, I would sell a 180 call spread on this sucker all day long. 180 is strong support. And certainly, let me get some more. Let me draw that line further over to the right here. All right, so that's a nice support level. You could even get a little safer and say, all right, I'm going to sell at the 200-day average. You could do a short-term 2-week credit spread, making money below the 200. You could even do a long-term out of the money credit spread, maybe up here at all-time highs, not all-time, but 15-month highs on the IWM, sell at 200. Long-term bear call spread on the IWM at 200. Sell the 200, buy the 205, or whatever the first strike is above 200. That's a great trade. Maybe we'll do that one this morning. I hadn't planned on it. I've got 2 others I want to get into before this, right before the bell. So, well, I'm getting excited. I wasn't feeling this excited before I started looking at the markets. It's exciting. This is the most, they say baseball is the most beautiful game, but it isn't. It's trading once you understand how to do it. All right. So let me just calm down, take a little sip of coffee. Breathe, breathe. Okay. It's not going to last long. All right. And then we've got oil. This conflict in Israel and Palestine is heartbreaking to see it. And I hate when I see people do this to themselves. And oil has come up as a result, quite a lot of volatility going on here. Biden's pressure on Saudi to pump up their production on oil, make friends with Israel. And then we got this bounce here happened after the conflict. And right now oil is volatile. Would I be prepared to say oil is going one way or the other? Not really. I would say probably the best prognosis on this trade is maybe oil above its 200-day average right now. We have 2 wars going on in the world, 2 big ones. There might be others I don't know about. Russia and in the Middle East. So oil supplies being constrained is a likely output of that. And so get smart. Sell a put spread underneath the 200-day average on oil would be a good trade, and maybe even a long-term trade on oil. Let's look at gold to open today. Gold, I was out hanging out with Shaman on Friday, so I didn't see the markets. But look here, big run up in gold on Friday. And of course, what I'm going to look at now is the UUP. Oh, awesome. Let me do this. Obviously, I hadn't seen this chart today, but this is exciting. And it's going to help us formulate perhaps an even stronger bearish prognosis. If I can get my Tom's tools to work. Come on. Come on. All right, I got it back now. So I'm going to go into a chart and overlay gold and the US dollar. And hopefully you'll be as excited as I am. So I'm going to type in gold here. So I'm in stock charts. I'm going to do on not paired gold, on not paired, click. God, what's going on with my computer this morning? UUP, overlay, update. All right, so Friday, the US dollar was basically flat, maybe up a little bit. Let's call it flat. And look what happened to gold on Friday. Boom, risk off. That was Thursday, excuse me. On Thursday, gold rose and the US dollar did not drop. Risk off on gold on Friday. We're going to see how this trend, and see it here. Gold was down a little bit. I'm sorry, UUP was down a little bit and gold was down a little bit. So it kind of stalled there, but that is a solid risk off move on gold on Thursday. What does that mean? That means that a bearish prognosis on the S&P 500, for example, or any of the markets, a bearish market prognosis has more weight if money is flowing into gold, perhaps in a risk-off fashion. Risk-off meaning gold is a less risky or risk-off asset, and stocks are riskier assets or a risk-on asset. And that gold pop on Thursday is an indication that perhaps that's what's happening. Money's flowing into gold, safer asset, safer than stocks. We'll see if that follows through. Obviously today it's not. Well, let's see. The market could just bounce and fade. We'll have to wait and see. I'm not buying a bullish run from here. I don't think we're heading above the 50-day average. And I don't think that, but I could be wrong about that, of course. What else do we want to look at here? So we looked at gold. So let's look at the VIX futures. They're down, of course, with the S&P 500 futures up, down a little bit, but the VIX is pretty high compared to what it's been over the last several months here. We're in the higher end of its range. This is the high end of the range, and we're up there. Okay. Now, with that, I've got 15 minutes. I do want to cover the portfolio, especially if some of you are in these stocks. Let's do that quickly. Now, one trade on Lockheed Martin came off last week. And again, on these rules, on these trades, what I do, the general rules of these are once you sell the spread, we got 35 cents when we placed this trade. We did 2 of them. We placed the trade in the morning, right about here. And then by the end of the day, after we got in on the same day, let me show you, on the same day, this is the power of getting in the first 15 minutes of the day. Great news on Lockheed Martin. The stock gapped up. We got in the morning. We sold this thing for 35 cents in the morning at about 9:15, whenever, 9:45, 15 minutes after the market opens, roughly. In that time frame, we sold for 35 cents. And by the end of the day, we could have bought this spread back for 10 cents, netting $25 of profit per contract. So by the end of the day, we had an 11% profit. Now, the rules are simple. Buy it back for 10% of what you sold it for. So that's what, call it 4 cents, 3 cents. The next day, we were able to pull this off for 3 cents, netting a very nice little profit in one day. We got in Monday morning and out by Tuesday afternoon. Actually, in the morning, so I'd say a 24-hour trade. Had you gotten out here, you would have probably gotten out for 2 pennies. I put 3 cents in here, or 7 cents here. That's actually 7 cents is too high. If you do 10%, that's 3.5 cents. I got too much here. It was actually worthless at the open. So I bought it back for 3 cents. So that would be 27. I had the wrong price in there. So I bought it back for 4 cents, netting 15% profit in 24 hours, plus a few minutes. So that's the power of the sniper approach. And we're going to do more here in a minute. And given I'm just keeping my eye on the clock, I've got 12 minutes. Let me just briefly talk about the long-term credit spreads. All of them are doing fine. I've got 1, 2, 3, 4, 5 long-term credits. These are, like fine wine. They sit in the background and they mature. You put orders on to buy them back for 10% of what you sold them for. Let's take a look at this one on FND. Look at this one. It's really in good shape. We sold it for 45 cents. Currently, we have $20 of profit, or 4%. And we're going to have an order. We have an order in to buy this back for 4 cents, 10% of the original credit. And that's going to happen pretty soon, especially if the stock keeps rising. The other rule is if the stock closes above the upper break even, you close it for a fairly significant loss, but a lot less than almost $450 of potential loss here. But here, depending on when it breaches the break even, even at expiration, it's close to zero. But depending on when, you got to take your hits on these. Do not let them run. Take them off at the break even. Don't even think twice. And I know a lot of you are in these credit spreads. I know a lot of you are in the NWTC community are in these long-term credit spreads. Hear me right now. As good as it is right now, if the market moves sharp or your stock moves sharply against you, you're going to lose money. So know that. Don't rest in this confidence that you just pull money out of the market. In a heartbeat, it could go the other way. I've talked to a few of you it's very easy to get enamored, like I'm just making it rain with money. And this strategy tends to do that, but these blue herring events happen, and you've got to be really careful. Position size, number one, keep your position size to 2 to 3% of your account. Don't back up the truck on these. I promise you, there'll come a time where you can get hurt. And I know because I did it. That's why I know. Match.com was a winner as well. We pulled this one off. I've got 10 minutes. I'm in good shape. Calm down, Mike. We're good. All we need is about 5 minutes. This one came off. We put it on the 10th. 7 days later, we took this off for about a 9% profit and bought it back for 10% of the original credit. Bad news, stock tanks, blah, blah, blah. And yeah, it sounds arrogant. I shouldn't have said it like that, but it kind of feels this easy sometimes with the sniper approach. Natural gas, this was a beautiful winner, and this is something that, and we're out of this one now. Now, the other trade plan here could have been, well, let it expire. All right. So we've got 37 days left. Currently, I've got 15% profit in the trade. I bought it back. I bought it back for 2 pennies right here. Why did I do that? Well, if I hold on for 37 more days, then I'll probably make another 2%. So I've got 15%. I can make 17.65%. If oil comes back or natural gas comes back down, I'll have to wait all the way to 37 days. Do I want to tie up $510 of margin waiting for 2 more percent? No, I would rather close this and do another one for more credit and use this. So basically what that means is I'm sitting on $510 of margin waiting for making 2% on it in 37 days. I can do much better than that with a new trade. And so I closed it. And there's another one that we can do this morning as well. Whirlpool was a loser. And this happens. You know, these things happen. You got to be able to, you know, take a punch. It's like boxing. You can't win a boxing match without getting punched in the face. It was a good trade. Bad news. Stock tanked. We were down here. We sold a call spread. Whirlpool recovered. It closed above the break even. We took it off, and we took a rather healthy loss on this one of 180. So that's what happened. Take it off, keep rolling. Now, green is everywhere. We have a couple of short-term. I'm not even worried about $17 loss or $20 profit on these. I'm buying them back for 10%, letting them run. These are, and we can look at this one just to see, because it's down $17. Am I worried about this one? No, I am not. I'm not worried. Still have a 97.5% statistical probability of profit. So that one, just let them run, follow the rules, detach, react as best you can. Now, the entire portfolio, I will say to you, is doing very well. So let me show you the overall results. Even though we took that $180 loss, do you see me worried about it? It happens. It just happens. Fishing's not called catching, and trading is not called profiting. Sometimes you lose. Always that's the case. All right, I'll just tell you what the results are. We're up about 10.36%. Average hold time is, I think, 11 or 12 days. And we have long-term credits in that result as well. So over the bulk of what we've been doing since July the 13th, 2022 has been making it rain pretty much 10% every couple of weeks. Okay, now let's go looking. There's 2 stocks in particular I want to try to get into at the start. First one, Lululemon. Anybody know what's up with Lululemon? Well, it's gapped up to 401, almost 402. The stock's going to be up here at the open. Why? Well, Lululemon is being added to the S&P 500. Yay! Why is that good for the stock? Institutions love the S&P 500. It's their playground, so to speak. It will get a lot more, already getting attention, but a lot more attention now that it's in the S&P 500. That is an event that tends to prop the stocks up after getting added. And so with the stock at 401, above 400, with 5 minutes to go, the next question is, how low do we want to go? Here, I want to put on a trade that makes money if Lulu goes up or down a little bit or even sideways, a put spread. And the one place that's screaming to me is to sell right here around 385. That would be the closest I'd want to get, but maybe lower. So that would be right at support, super strong. Look at this resistance level. It broke above resistance here and then came down with the rest of the markets. It's bounced off the 200-day average. It got added to the S&P 500. It's now 401. It's above this resistance level. I'm thinking 380. So a little bit, I know there's a lot of lines on this chart. Maybe around 380 would be, to me, a decent place to sell. So let's do that. And I'm going to throw a price on. Usually 11 days. You could try a 4-day trade if you want to get closer. But I can't do all the different permutations. But certainly I can go to it. The normal spread is 2 weeks in length. Sometimes 1 week if there's any credit. And again, I want to sell at 380. And I got to go pretty fast because it'll be worth less in about 15 minutes. So at 385, 380, let's see, the stock is up 25 points. So for me to rough out what the current price might be at the open, I've got to go back down 25 points. So that would be right there. So there's about 40 cents there, looks like. So
Mike, pre-market is at 402.
Right.
Okay.
What do you have a problem with?
It's pre-market on Lulu is it's $402.
Yeah, that's what I was saying. Yeah, I said that. Yeah, it's
Okay.
up here. It's up here. Where do you want to sell, buddy? You can sell as close as you want. I want to be below 385, 380, 385 is where I want to be. 385 is where I want to be.
Okay. For some reason, I was focused on bears and calls, and you're on the other side.
Yeah,
Sorry.
I'm bullish on this sucker. Yeah.
Sorry.
100%. Oh, no problem, man. No problem. No problem. All right, let's see what we can get. 385. 385 down 25 points. That's 360. So roughly, we go this far out of the money. There's 30 cents there. So let me try the 385, and I'm going to go for 50 cents. So what I'm doing here is I'm trying to figure out how far out of the money the stock was on Friday. All right, so the current stock is 25 points higher roughly. And so I'm looking at the 385 and then I'm dropping it by 25 points to get an estimate of what I might be able to get. So that's if you have questions about that, I can do more later, but I'm going to put it in for 50 cents. And let's see if we can get it. So 50 cents is on a 2.5 point spread, 50 cents risk 25 or risk $2. So 5,200, what, a 25% return on investment available at 385. As long as Lulu is above 385, we're in good shape. So I could do 2 contracts here, and then my risk would be $4 or $400. All right, so the spread distance minus the credit, 2.5 minus 50 cents is the risk. $2 times 2 is $400 of risk. That's how you figure that out. Let's put that in there. I'll paste it for you. And we're going to open here in just a second.
I got lost on where you got. I didn't understand.
Johnny, your voice didn't come through, buddy. It was all garbled.
I I got lost on the 385 thing
Oh, I'll do it later. I don't
versus
have time to do it.
402.
Yeah, I'll cover that in a few minutes again. Anyway, here's the trade. And now I'm gonna go back and see. Wow, it's showing 86 cents. That's Lulu. 86 cents. That's the mark price. Well, now I'm gonna cancel replace and go up higher to mid price. Let's make it 85 cents. It hasn't even filled yet. Let's make it
It's
85.
jumping all over the place, Mike.
It's
That's
about
normal.
44 cents live to 37.
44 cents to 37.
Yeah.
Yeah.
Okay. Let's try for 45. Yeah, now it's down to 37. Now 40 cents, 40 divided by 210, still 20%. It's good. It's still good. I'm gonna
Looks
take
like it's settling around 40.
Extremely low confidence.
What's that, Earl?
Extremely low
Oh, that's
confidence.
Jeff. It's in the 38 to 42 is where it's kind of hanging out.
But you know, just gotta
Yeah, but
crank
Earl's
in.
talking as well,
Yeah.
Jeff.
This is
My
not
bad.
what the market's been doing. Bonds,
What are you saying?
I think it was a Jeff background.
Oh, okay, okay. All right. All right, at 42, I'm gonna leave it at 40 for a little bit. Let's see what happens here. Checking out Lulu on the open. Yeah, it's above 400. It's risen a bit. Let's just let that sit. I'll take 40 cents. I think that's a good price. That'd be a 20% return. So it's moving between 35 and 40. All right, well, there's that one. And the
I
other,
put it before market open and got 90 cents.
you sold the 385, 382?
Yeah, got it 90 cents just pre-market.
I don't know how you could. That's amazing that you got that, but that's great.
I put 50 cents. I put 50 cents in and hit it before the bell and it went 90.
You got it for 90. Wow. Live account? Live
Got it for 90.
broker? All right, well, congrats. That's a good trade.
I got sold at 40 cents, Mike.
You got 40. Looks like I'm about to get it as well. Mid price 47 and a half. Yeah, these are the fun credits. I love these credits. I'll track it at 40. And I'll do it later because I want to go after the other one. The other one, Pfizer was in the news. Pfizer has earnings coming out up in a couple of weeks. And Pfizer came out and said, our earnings are going to be crappy. They're cutting. They came out before earnings and cut their guidance and cited a decline in COVID business. So people are not buying the drug. So they're just, here we go. The stock falls after company slashes $9 billion from sales, $9 billion from their sales outlook, citing less demand for their COVID vaccines. And on that news, Pfizer is up. So their earnings is, let's see the earnings here, by the way. Let's check out earnings. Earnings on Pfizer is on Halloween. So that's what, 15 days from now, 2 weeks from now, Pfizer announces earnings. They've already said they're going to suck. And the stock has bounced as a result. And there was a couple, I think there was a look at this. Jefferies upgrades Pfizer to buy, raises price target to 39. What? Okay. $9 billion less sales? Come on. I don't know. You know, maybe Jefferies sees something I don't, or maybe there's a vested interest in the stock, which has been under great pressure, confirmed that there's reason for it to be under great pressure, and yet it rose. Now that's what I was expecting the stock. It was at one point lower for the day, and now it seems to have bounced. So, and because earnings is in 2 weeks, you can't really sell a 2-week credit spread because IV rushes into earnings. And if unless the stock is moving your way, IV will hurt you, and you'll have to be out perhaps for a loss. So you don't want to put a credit spread on 2 weeks before earnings. IV will rush. Now another sister company BNTX. Look at this one. So this one has fallen in sympathy. BioNTech and Pfizer partnered on the original vaccines. And now this stock has gapped down in sympathy for the Pfizer news, $9 billion less sales. And their earnings is coming up unconfirmed. So I'm checking earnings. These credit spreads right now, you've got to check your earnings. You got to check earnings. So BNTX, I went to their website, estimated for November the 6th. Okay. So what I like here is looking for resistance. Okay, so here's our 50-day average. Then this dotted purple line is the 30-day, and then this is the blue day, the dotted blue line. So I like selling up at this area here. This is resistance, a lot of resistance up here. So 115, maybe 110. Also notable is that the stock is right here at this support level, right? Let's call it 95. So far, right at the tail there, that's 95. And this morning, the low is just below 95. So that support level has kicked in, and we could see a bounce along with Pfizer into their earnings coming up November the 6th. So what I'd like to do is sell something at 115, a 115 call spread. So if I go, now here's the other problem we have is this doesn't have weekly options. So I could sell for this Friday expiration at 115. There's 15 cents credit on $5 of, well, 485 in risk. That's not a very nice return. So that's really not viable. You could do it with pretty high probability. We went down to 110. It's even showing a debit. Slippage is white on this one. So I like this trade. I don't think we're going to be seeing it rise into earnings too much, at least. But I'm just not prepared to 110. What's at 110 this week? Yeah, 40 cents. 40 cents on 460. That's not even 10%. But that's not bad for a week. Something to consider. I don't love it though. Maybe 105. I don't like the bounce off I don't like the hammer pattern off 95 support though. That's what I'm worried about. It's bouncing. Pfizer's up in the wake of that news. It's got 100 resistance here. 105 would be somewhat reasonable for this week, but I don't like this pattern, y'all. Already, the volume is almost average for the day. So you got to watch that. I'm only comfortable up here. Now, the other thing you could do as well is do a longer term one. Let's try that. Let's go out to November. And let's see if we can get up a little higher. What about 120? So we'd have to ride through earnings. You think they're going to blow out their earnings if they're in the COVID vaccine market? Probably not. 120 would be a reasonable trade. What's there? 15 cents, not enough. Let's go out one more month. We could do a long-term one here. What about December the 15th? That's 70 cents credit at 120. This could be a longer term one. All right, here's what I'm going to suggest. Why don't we look at a January trade selling at 125? Long-term, 125 here was resistance. 125 up here is also resistance. And there's resistance at the 200 coinciding currently with 120. Lots of resistance to keep us safe up here at 125. Longer term, let's try for January 19th. And that's going to be a 95-day. That's typically the duration of a long-term, 60 to 90 days. And slippage out there currently is so high, so wide, that it's showing a debit out there. But that's what I like. I'm going to say, let's say, how much would we want to get up there? I just got 40 cents on the Lulu trade. 65 cents credit for the December 15s. What's 65 divided by 135? Let me do that here. Should be able to do that in my head, but I can't anymore. 65 divided by 435. It's 15%. That's good. Although I'm selling at the wrong strike here. Sorry, one sec. 125, 130. Yeah, I like this long term if we can get any credit for it. 15 cents. Yeah, currently shows 15 cents. Not enough credit there. Anyway, unfortunately, I'm not seeing the options lining up to our favor. I would trade this with a broken wing butterfly all day long. But really, to take this on, you're going to have to come down to probably use 30-day options, which will span earnings, and just not a good idea. We don't have enough granularity and expiration date to make that one worth it. But still, you know, a really good stock. Unlikely that you'll see this stock above the 200 anytime soon. Okay, so there's BioNTech. The other one I got excited about and I hadn't thought about was IWM. Oh, let's see what the market's doing first, because I was just going to make fun of the IWM. I shouldn't do that, but yeah, the markets are down a little bit to open. And I'm sorry, up a little bit to open. IWM is also up a little bit to open. It's inside though. This bearish engulfing pattern, engulfing this bar. So far it's still riding within the body of Friday's bearish action. So from here, I'm like, let's sell some call spreads. Maybe up at 182. You could even go down to 180 on this, but let's see if we can get a really safe one. Let's sell up at 182. What's there? Short term, lots of expirations. Let's see. What's Friday? 5, 16, 17, 18, 19, 20. So the 27th would be expiration a week from Friday. This would be a 2-week trade, roughly, selling at 182. Let's see what we can get. Nothing. A penny. All right, we got to come down. Let's see, 180. I'd say 180. 180 is as close as I would get. What can we get for 180s? 5 cents on 95 cents, 5%, 6% at 180. So that to me is not enough. I want at least a percentage point a day. I like 10% minimum and a minimum of 1% a day. So with that said, not there, you'd have to come down even further. And I'm not comfortable doing that just yet. However, if you start seeing some of this action here, then the 182s will bring in more credit, or maybe the 181s, 182s, I'd say. So you could put an order in to grab it for 25 cents or 20 cents. I do that quite a bit, or just wait. If you see the IWM come up, this resistance level here is mega strong. This resistance at the 200, mega strong. You got the 50 crossing beneath, bearish pattern, big one, self-fulfilling, in fact. Hey, death cross, let's sell the IWM. Traders do that. It's almost self-fulfilling. But, and then long-term bear call spreads as well would make sense. Let's look at UNG real quick here. And I've got a quick lesson for you today. Oh, good. George, did you sell the 8 calls on your UNG position? If you're
I did. I'm sitting on those right now.
I would maybe buy them back, man. What are they worth?
I haven't looked yet.
You made money on those short calls. If you can buy them back for 10% of what you sold them, just wait.
But well, I'm correcting myself. I did the put. I got to hang in. I did an 8 put.
Oh, I thought you you owned the stock and you sold calls against it.
No, I did that before. That was when I did it at 6.5. So I'm waiting for it to come up to 8. or else get assigned here on a November 17th expiration.
You're short the 8 puts?
Yeah.
Okay.
Yeah.
Yeah. All right. Well, I like to sell underneath. And now that we've got this bit of a gift here, I love it. Now I'd say 7. Let's sell at 650 here. It's hard to read this chart. Let me remind you about the gift of UNG. Look, it's at the lowest, close to the lowest price it's ever been. And it's not been long ago where the UNG natural gas, it's a commodity. It will not go to zero. People are going to be using natural gas in the winter. It was at 24 back in November of last year, October of last year, about the same. It was at 22 this time last year. It's come down hard. It's a commodity. It's not going to zero. There is no better credit spread in my view than this one. So let's do it. Here's what I'm going to do. 650. 650 is good support. 6 is the safest, but really they're all safe because you can just take the stock at a low price, own it, sell calls against it, and wait for natural gas to rise. It's in the cellar. The lowest price UNG has been is 587, and we're almost there. Would you be willing to own the stock for $6 or 650 or 620? Yeah, absolutely. And then wait, sell calls if the stock rises. So that's what I'm doing. And I'm not even going to use the software. We could do we could do any time frame we want. Let's try 30-day, 32-day time frame and see what's available here. I've got, if we sold the 6s, that would give us 5 cents on a $1 spread. So $5 credit, $95 of risk. That's what, 6%. That's available. I don't have 50-cent strikes, so let's try this month here. Now this is where I really want to sell at 650. So this is November the 10th, a 25-day trade on UNG. Let's step up to the heat and let's get in and out quickly. We can sell this for 8 cents. And the risk then would be 92% or 92 cents. So there's what, 9%, 10% almost, 9.5%, 9% profit.
42 cents. It's only a 50-cent spread.
When it bounced off of that,
On the
what's
risk.
we're back up at the overnight high. Still an inside day.
Oh, yes,
Yeah, the
you're
risk-
right.
Narrow range.
Yeah.
Yeah, that sound in the background is a little distracting. So you're right. Sorry, Jeff, I missed that. Absolutely. It's 42 cents. Whoa, thank you for slow down, Mikey. Slow it down. Hold on, let me look at a macaw or something.
I'm looking over at.
I have to wrestle with this because I get excited.
The other.
So yeah, it's 50 cents divided by 42. That's a 20+% return. I'm on that one like white on rice, $42 per contract. We did 10, 12. We'll do 12 of these. If we get $42 of risk, that's right around $500. And that's it. I want this. This is a gift. This setup is a gift. Could the stock drop hard and you get hit? Yeah. But and could UNG drop lower than 5 or 6? Yeah, it could. It's still possible. So I've got to be really authentic about that. Always you can lose. But our directional edge is extraordinarily sharp here. So there's a trade. And what I like to do on these as well is, the stock's dropping. And as it drops, this credit gets higher. So at mid price, I'll often just set this as a GTC. So I'll make it a GTC. You could get 7 cents right now, most likely. I'm going to go for 8 and I'm going to put it as a GTC. If this downtrend continues, I'll get that. Maybe I'll set it at 10.
I
do
got
that.
it for 8.
You got it for 8, Johnny?
Yeah.
Okay, good. I'll track it at 8 then. I'll probably get that filled here in a minute. Okay. There's a lot more than this, everybody. So we have a trade on UNG that got filled. We also have one on Lulu. There's plenty more. And now I want to do this. I want to sort of revisit what Snipers is. Snipers is high probability short-term profits, and you can do them on earnings or any kind of news. But guess what? It's earnings season, prime time earnings season. There's going to be a lot of earnings coming up. This is the next 4 weeks. And notice this week in the hundreds. And in the we got almost 15, well over 1,000 earnings next week, even more the following, and even more the following. So 2 things. 1, be careful selling credit spreads on stocks that are about to announce earnings. Don't do that. Do not do that. IV rush will hurt your credit spread. Don't do it. Do not do it. Flip the battery in backwards. And after earnings, what we just did with Lulu, imagine that'd be an earnings announcement where they raise future guidance. Perfect time to come in and sell these sniper credits. So I'm going to give you some rules here and some examples just so that you're all prepared. We're not going to meet every day of the week during the next 4 weeks. So I want to prepare you to go out and find your own. Okay. So here's an example of NVIDIA. This was back in May. NVIDIA gapped up. They blew out their earnings, blew them out, and skyrocketed their future guidance. And the stock gapped up on massive volume. So stocks move at earnings. This is the perfect candidate for bullish broken wing, but a bullish credit spread. And then Advanced Auto Parts, back earlier in the year, I can't remember what date this was, gapped down on bad earnings. They missed their expectations and lowered their future guidance. The chances of the stock rising after that are slim. So this is the opportunity. And when you want to get into these in the first 15 minutes of the day, big volumes, look for big volume as well. So the sniper system is literally sniping high probability credit spreads, preferably at the open, although that's not a hard, fast rule. You'll get more credit in the first 30 minutes than you'll get later in the day following earnings. So we're going to snipe some short-term profits. So here are the rules then. You want good news and bad news. So ideally, this is what it looks like. The stock gaps up on earnings. They blew out their expectations and they raised future guidance. That bonus maybe shouldn't be a bonus. Maybe that's a requirement. There'll be plenty of stocks this month. Now, in a non-earnings season, maybe I don't grab the future guidance, but now we should. So look for stocks that beat their earnings expectations and then raise future guidance. And I think there's going to be more of these, though. I think we're going to see gap downs on bad earnings. They missed their expectations and they lowered their future guidance. So when a company lowers its future guidance, it's literally like an anchor around the stock price. Why would a company, after missing earnings and saying it's going to get even worse next earnings, why is that stock going to rise into the next earnings announcement? It could, but the chances of that are greatly reduced by these future guidances. And then what do you do once you find them? Well, sell a 14. There's different ways to do it, but just the basic, sell a 14-day on good news, a bullish gap on good news, sell a 14-day out of the money bull put spread at support. And then if it was a bearish, you sell it at resistance. Stock gaps up, sell underneath. And then 2 simple rules. And these are the rules we've been using here in snipers that have generated the amazing results that we've had. Simple rules. Everything, it's not personal. It's not Mike. It's rules, rules, rules. I don't take it personally. I don't take a loss personally. I don't take profits personally because it has nothing to do with me. I'm just following rules. And when I have a loss, I take it. I don't say, well, maybe the stock's going to bounce back in my direction. Just slap yourself, take it off and go get another one. Rock and fire, rock and fire. Get into the rules. Let the rules tell you what to do, because you will lose on these. And if you succumb to hopium, even doing research to suggest the stock's going to move your way, proving what you want to happen, torturing the data until it confesses, which is I'm guilty of. I know some of you are as well. Take them off. Take the loss. The traders that are able to take losses when it's time to take the losses and do it without a lot of consternation, those traders are consistent. And those traders are the only kind of traders that are going to be able to do this long term. It's maybe sobering, but it's true. And I want you all to be successful. So here's an example on NVIDIA. We didn't actually do this trade, but this was what I would have done. So NVIDIA gaps up on good news. You find a support level. In this case, 365, the bottom of the tail of this hammer pattern, big volume. The pattern itself with no news would suggest further upside. And then what you do underneath is you sell a bull put spread at 365 support. Something that looks remarkably like this. This is a trade you could have done following these rules on May the 25th. What do? We sold a 365 put and then bought the underlying, the first one underneath. The tighter, the better. The tighter the slippage, the tighter the spread width, the more credit, or more return on investment. So we sold this. This could have been sold for 160. So there's our entry credit. And the profit stop for this would be to buy that back for 20%. What am I using? Am I using 20% or 10%? 10%. I got the wrong. I used a different rule, but there'd be 10. You'd buy this back. So you buy that back for 10% of your original credit, which would be 16 cents. So that should be a 16-cent debit right there. That's the profit stop. And you set that as a GTC and you forget about it. Just let it take it off. So you've netted 90% of your original credit. And then, you know what, if you didn't take it off at 10% of your original credit, then you'd be sitting on $340 of margin waiting for 4% more while locking up $340. It's really smart. Free up your margin, go on to the next one. So that's the fun side. The other is, in the event the stock closes below the break even in this case, then you just close it. Yeah, you're going to lose about $100 almost, just, maybe $95. Take it, move on. What's next? In this particular case, the stock, we bought it back. The stock went up, we bought it back, and we netted a nice little profit, 37% profit in a matter of weeks, days actually. Advanced Auto Part, tanks, these are the best. Stocks that tank are better. IV's higher. If the stock recovers, IV helps you when it drops. Bad news is more impactful than good. So here's the same thing. You find resistance now. You sell a bear call spread at resistance, something very much like this. Let me correct my slide. No, I did this one correct. Okay. All right. So we got 43 cents credit on one contract. And then you set a GTC order to buy it back for 4 cents, netting 39 cents. GTC, set it, forget it. And then if the stock comes up, closes above the upper break even, you get out, you buy the spread back for whatever you have to buy it back for. Don't hope, don't wish, don't pray, take it off, move on to the next one. That's the basics. That's the basics. And with earnings coming and so much pressure on the economy, on revenues for companies, all of that should be a very volatile earnings season. And I just want to make sure that all of you are prepared. We'll do them on Mondays as much as they come up on Mondays. typically earnings isn't a big, Mondays aren't big earnings days. But the rest of the weeks are, and I just want to make sure that you're all comfortable with this process during earnings. And here's how the advanced auto parts trade worked out. The stock tanked, and we ended up pulling this off for a nice little profit. Okay. And with that, I'm going to check the time. It's right at the top of the hour. Who has questions or comments? Any trades you're in that I haven't covered you want to talk about? Any new trades?
Question, Mike.
Yeah, go ahead, Jim.
So we're talking about Lululemon being added to the S&P 500. Is there the inverse of that? Is what's being kicked off? Will they take a hit?
Oh, yeah. Oh, yes, yes, yes. So that's the question. If BioNTech got added, somebody got pulled off. So there's an opportunity there for a little research. Who got taken out of the S&P 500? That stock is likely to have dropped today.
All right, thanks.
You're welcome. It's not a very common piece of news, but it does happen throughout the year. Let's see what Lulu's doing right now. What are you doing, Lululemon? Lulu. Yeah, it's setting new highs. Opened here. It's now about, it's hitting 410. It's above 410. This could keep running. This could keep running. That's a good one. Go ahead, Tone. Tony? Tony, we need you to unmute. Daniel, go ahead, buddy.
That was a mistake on my part. Sorry.
Oh, no problem, bud. No problems. Go ahead, Dan.
I'm up 39%, 30 or 36% on Lulu right now.
Awesome. That's great. Really good. Now, what I didn't do on Lulu and I'll do now is once you're filled, then you want to put a GTC order in to buy it back for 10%. So let's go ahead. Here's the filled order. I'll right click it, create the opposite order. This is going to be a GTC, and I want to buy it back for 4 cents.
Excuse me. Good morning, everyone. The stock that got replaced was Activision for Lulu.
Oh, yeah. Yeah, they're being bought by Apple. I wonder. Yeah, we'll look at that one. The current spread is 32 cents. That's actually pretty high still. We got in for 40. So we've made what, 25% of our max credit already. So let's look at Activision. If I can remember the symbol. Acti?
ATVI.
ATVI, that's right. Thank you. Yeah, thanks for pointing that out, Paul, but the stock is being purchased by Apple. Whenever you see this, the average true range, the bars tighten and it goes sideways. So this is basically the price at which Apple is courting Activision Blizzard. So it hasn't dropped because it's being bought. That's
it's not Apple, it's Microsoft.
Yeah, you're right. Did I say Apple? I mean, I meant Microsoft. Microsoft's buying Activision. So it's not going anywhere. It's not taking a hit. And it should come off because this company's about to disappear. So that's why they took it out and then put in Lulu. All right. Well, y'all have a good week this week. We have earnings coming up at 2:00. Matt's leading us through. We're in the midst of an earnings game, and lots of people are having fun with that. Tomorrow, 3 p.m. Eastern time, we have Hedge Fund Live. We're killing it in Hedge Fund right now. And I think that's it for the next couple of days. We also have on Wednesday morning, Clayton Elliott is teaching condors and four-legged trades. And he's done a lot of research, new stuff that he's discovered, and he's sharing it with us in document form as well. So that'll be at 8:30 Eastern time on Wednesday. So I encourage you all to come to that. And Gerardito, anything else I'm missing, buddy?
That's pretty much everything for this week, Mike. Thank you
right.
very much for that start of the week, and thank you very much, everybody, for being here.
All right. Yeah. Thanks a lot, everybody. We love you. We'll see you soon. Have an awesome week. Pura vida.